Hi, everyone. We are live. Welcome to this week's U.S. market update. Let's just get right to the charts. When we take a look at where the market finished today, a couple important things to go over. When we talk about the economic reports that came out today, we're talking about the Tuesday had the CPI report come out, and I'm going to move the chart back. And here's what happened on Tuesday. So CPI comes out, it's a little bit hotter than expected, and the market is like, yeah, that wasn't great, but kind of shakes it off. So you can see just a bit of a neutral day. Well, then we get to Thursday, which is right here, and the PPI report comes out, and it's even a little bit hotter than the CPI was, and that turned the market to the downside. A couple important things that happened today, I think, are the fact that yesterday on that PPI report, closing on the low, we broke below the 10-day moving average, and then we gave that some follow through today. Even though we closed near the high of the day, we still had another close below the 10-day moving average. So two closes below the 10-day moving average. We need to take a look at that. In addition, we also had a break of 410. So a couple things to note of importance, in my opinion: breaking the 10-day moving average and breaking below 410. Well, does that mean that this zigzag pattern that we've been talking about is no longer in play? And no, it doesn't. If we take a look here at this zigzag that we've shown you numerous times over the past few weeks with that potential 100% extension, you can see, and we talked about this in last night's insiders meeting, which is a meeting that we have for our alert subscribers, that we had a little bit of a triangle there, and you're going to see that on a couple of the other charts as well. And Elliott always said, don't diss the small triangles, pay attention to those as well. Don't look just at the big one. So breaking to the downside there, couldn't really call that a definitive breakout yesterday, but we can today. So now we see, do we get follow through to the downside? And what could happen is this could be a zigzag within the C wave, which makes that a complex C wave. In other words, we have the move to the upside here, and then you can see we start to look at where the corrective levels could be, and the 38.2% level is down around 402. So a little bit more to the downside there. But it doesn't mean that this zigzag is disqualified or out of play. But we could start looking for, it's kind of already a bit complex with the fact that it has a triangle in it. That's a corrective pattern as well. Flat zigzags and triangles, those are all corrective patterns. A couple other things to note, in addition to the economic data with the CPI and the PPI, is retail sales came out and they jumped a surprising 3%. I like the headline, smashing expectations. By the way, smash that like button if you like these videos, or hit subscribe and be notified immediately when one of these videos is posted, or when we do one of these live streams like we are today or this evening. So a big surprise in the retail sales in January. Now, one of the things that I've been talking about is this personal savings rate. You can see this big move to the upside that occurred here. Now, that stimulus money that came out, the fact that people were spending money because they weren't going anywhere, people weren't doing anything, and the savings rate went way up. And the expectation is all that excess money that came from stimulus and extra savings was going to dry up around the beginning of the summertime here, somewhere around May or June. Now, the thing that I find troubling here is you can see that this current chart is showing that we've broken kind of where the average was. We're now spending more money than we were even before we got all that excess cash. Now, how's that possible? The consumer, we all know that the U.S. consumer is a hardy person, and we spend and spend. And this data also came out this week. Consumer debt hits a record 16.9 trillion, and delinquencies are also on the rise. You think those two might have something to do with each other? The fact that the consumer is still spending, the money is drying up, and we're going further into debt. So actually, all three of the things kind of add up together. So those things I think are a little bit concerning, things that we have to keep an eye on. And again, the potential for maybe a little bit further to the downside at the beginning of the week is there. Back on the 10-day moving average, we're not that far below it, so we're not really that oversold yet. anything could happen at the beginning of next week. So let's take a look at the VIX, see what that's showing. And as I've mentioned before, we have this area down here with the wave 5. Perhaps that's the low. If so, then we should turn and head back up to the previous 4. So getting the VIX back up to around 25 or so. I still think the markets can handle that and the upward move can stay intact. If we break above that and we start looking at VIX levels around 30 or 35, we had questions that came in Tuesday night in our Trade Finder. By the way, if you haven't signed up for Trade Finder, you can do it at our website, ewotrader.com. We do it every Tuesday night at 9 p.m. Eastern time. It's free. We talk the markets. We look for trade ideas, and we have a live Q&A at the end. And came from that. Someone had commented that they'd seen a lot of way out of the money calls being bought on the VIX. And we were asking, does that mean the VIX is growing? Some of them were up at 40, some of them were up at 50. And my commentary was, well, that doesn't necessarily mean that they feel that the VIX is going to go to 40 or 50. When you buy options that are way out of the money, if the VIX does start to go up, then you get into the vertical part of that lazy S curve of which the delta is, and you get acceleration on the amount of gains. So buying out of the money options, I think, is a smart thing to do. Now, are they right on the VIX going up? Were those options just bought as protection against a portfolio? It's hard to know, but anyway, it does show that we get really intelligent questions that are asked in our Tuesday night Trade Finder. But my point is that I do think the market can still handle a VIX up to around 25. But if we start to blow above that level, then I think that's a real problem, and the market starts to head to the downside. Taking a look at interest rates, and here we are. Boy, we talked about this in Tuesday night's Trade Finder as well, that with this wave 5 finishing here, kind of what I was just talking about on the VIX, you can see interest rates have already gone back to the previous 4. And this is the range where I feel that it's the most conducive to the market going to the upside if we can stay in this range. If we start to break above this level here, and maybe start a new impulse pattern to the upside, because when a wave 5 ends and doesn't extend more than 100%, you're supposed to retrace to the previous 4. That's LA wave rules. We've now done that. So everything that's supposed to happen in this LA wave pattern has occurred. We take a look at the 10-day moving average. We are just a bit above the 10-day moving average, so perhaps a little bit of a move to the downside in rates to start the week. But if we start having rates that start powering ahead, then we get to the point where are we going to have even more problems in the market moving to the downside? If you're wondering, the Fed Fund futures that I mentioned last week, we're pricing in 50 basis point of rate cuts this year. That's moved out to the beginning of next year. So we're kind of switching that. There's still a small percentage, but the greater percentage is moving towards those rate cuts being at the beginning of next year, not at the end of this year. So that's what happened with that CPI and PPI report coming in hotter than expected. It shifted that a bit. And so that's what the market's trying to figure out, is trying to reprice that in. And that's why we could get a little bit of a move down. Perhaps we just come down and test the 50-day moving average on the SPY. We'll see how that plays out. Looking at some of our other markets, on the Dow, we've been talking about this triangle pattern that existed here, and it does look like we're trying to break out, but we did come back up to that near the close. There was an imbalance to the buy side on the close, but that could be because there's a holiday weekend. As a reminder, the markets are closed Monday in observance of Washington's birthday. So we have a holiday weekend. Maybe it was just short covering moving in to the close, but that's what allowed the market to move back up towards that lower trend line in the triangle. But which way are we going to break? It's still not clear yet, even though it looks like we're trying to sneak out to the downside. Now take a look at the Qs. Look at this doji here that we have on the Qs. What does that mean for the beginning of the week? Are we going to turn and head back to the upside here? Or does that mean that we're going to head down and come and look at this 290 level right around where that 4 is forecast, and also a support line on 290. But with that doji, anything could happen. We closed right on the 10-day moving average yesterday, so this is just the first day breaking it. And with the doji, makes Tuesday's trading pretty interesting on the Qs, I think. And take a look at this triangle on the Russell. Here we go. There's that nice, neat, symmetrical triangle. This is my favorite breakout pattern of all the patterns. When you have a security, whatever it is, that runs up, you can see this little zigzag here that occurred on that almost vertical move to the upside. So when you have a run up and then you consolidate into a symmetrical triangle, that breaks out. The Russell is going to break out. It's going to make a pretty decent move, about 10 points at least in the IWM. Which way is it going to go? There's no way to know that, even though you can say, well, we're in a wave 3 to the upside. But as we talked about last week, and some of you commented on the last video, triangles trump everything. So really, when you see a triangle, you want to just take the Elliott wave pattern off and focus on the fact this could go either direction. There's no rhyme or reason as to which way it goes. Some stocks of interest. How about Bitcoin giving us a little bit of follow through here? Talked about that last night with this big move back up to the 24,000 level and getting above it. I really kind of thought that when we broke down below the 10-day moving average, we may need to come down and test 20,000 before we got back up there. But no, big turnaround back up there and a little bit of follow through with a second close above that 24,000 level. We're a little above the 10-day moving average. So the most bullish scenario for Bitcoin, in my opinion, is if we can hold this level, do some consolidation like we were right under 24,000, do a little bit of consolidation there, let the 10-day moving average catch up above 24,000. And if that occurs, it should be a pretty quick move up to 28,000. Shouldn't take long at all to get back up there, because that's the next point of any sort of significant resistance. Tesla, heavily talked about on Twitter always, but today as well. And boy, what an impressive move in Tesla. But here's a couple things, and I got a question for you. I want to know what you think about Tesla. Leave a comment under the video if you're watching the recording, or put it in the comment section with the live stream that we're doing now. What do you think on Tesla? Look what's going on. We've got up to 220. That's kind of the last little point of resistance. In other words, if Tesla can break above 220, we're off to going back up to the highs. I believe we go back up and test these highs up here around 320. It's got to do that first with follow through. So we're at a wave 4 that's at 55%. It's still a qualified 5-wave to the downside pattern. And this wave 4 is right between 50 and 61.8%. So there's a lot of resistance there in the Elliott wave pattern with these fib levels, and from the pattern itself of the security, Tesla, the underlying, it also has a lot of resistance there aside from the Elliott wave and Fibonacci stuff. So Tesla's going to have a hard time getting above 220. But as I said, if it does, I think it moves to 320. But does it fall and start to head back down? So what do you think? Does Tesla break above 220 and take off to the upside? Or was that it? And now we're headed lower for a while, possibly even to that wave 5 target, but drifting down off of this major part of resistance that we're on now. So this is literally, pun intended here, where the rubber meets the road for Tesla. And so DraftKings, we talked about this Tuesday night, and a question came in. Again, great questions that we get in the live Q&A, and somebody asked about DraftKings. And I'm like, well, if the stock is going to have good earnings, this is going to be it. You know, we're coming through this area, and the Super Bowl just happened, which is the #1 betting event in the world. So can we break above that area? And boom, on the earnings report, yep. And so good guidance. So that propelled the stock to the upside. But now with DraftKings, we are overbought, and we are right here at those recent highs. We're at a point now where this almost looks like kind of a good short-term short, if you will, with the fact that we've gone so vertical over these couple of days, and this gap, and then the separation with the 10-day moving average. All those things pile into place. The best case scenario for this, I think, is just to go sideways and let the 10-day moving average catch up. But I wouldn't be surprised to see a little bit of backing and filling at the early part of next week on DraftKings. Apple, nice consolidation. There's another doji. So you can see with all these triangles in the markets, these dojis in the stocks, the doji on the Qs, there's a lot of indecision right now on where things go next week. That's what we're seeing with these triangles. And we have a little one here, not very large, but a little one here in Apple. You could kind of call that, if you wanted to, you could even make that a little bit of a symmetrical triangle, or you could call it a descending triangle right around 50. But regardless, we have consolidation here right above this important level of 150. You can see how that's acted as support and resistance over time. So where's Apple going to break? It's also still in a qualified 5-wave to the downside pattern. Now, if all these triangles break to the upside, then we're going to disqualify all of these Elliott wave to the downside patterns. That could happen, or they could hold and we could start lower. So as I say, boy, by the time we talk to you again next week, it's going to be really interesting to see what's going on. Nvidia, also a stock of interest. And if you look at the 10-day moving average here, first break below the 10-day moving average. So we're going through some consolidation here. And really, it's in a bit of no man's land right now, Nvidia. So can we get back down to 200? Likely. And it wouldn't shock me at all either to see Nvidia drift back down here, especially if we have a weak market next week, to the 50-day moving average. That also coincides where support would be, kind of in this 190 range. We're not there yet, but if we get a follow-through day to the downside on Tuesday, then that seems to be the likely move. A little bit of a rounded top there, Nvidia. So I'd be a bit cautious on Nvidia, at least over the near term, before we figure out where things are going to go. I thought I would throw in SLV. For the longest time, we've been talking about GLD, SLV, the metals, all the ETFs. We're going through these massive consolidations, and if we could break to the upside, we'd really finally have something going in the metals, and it didn't happen. We got this big break to the downside, gapping down and traveling lower, and then we got a little bit oversold. So the move back to the upside today, I wouldn't put a whole lot of weight in that. I think that's just an oversold bounce. It seems likely that SLV is heading down towards the support level around 19. It's just, again, also in a bit of no man's land right here, just like Nvidia. So to find some support here, I don't really see it. I think 19 could be where we come in and find support, and then we can look at the metals again, see what happens from there. That's what I wanted to share with you this evening. Zach, if you're there, we have Zach from support, and fresh back from the Super Bowl. And if we have any live questions, I'm happy to take a few of those and then send everybody out to their Friday evening.
Absolutely. Yeah, sounds great, Rob. I'm really enjoying these Friday sessions and catching up with you and hearing your analysis on the brief market update. And I think everyone out there watching is in agreement of that. Definitely have some questions here. You covered SLV. There was a question on GLD though.
Okay, well, let's they're going to be similar, but let's take a look and see what the chart of GLD looks like. Now, the difference here is GLD is at a support level. There is support resistance at 170, as you can see, going all the way back to last summer, and then into the summer. Then we got back over there again at the end of the year, broke above it. Now we're back down testing it. So while SLV kind of has that area around 19, is this support and resistance area, GLD is there. So can it bounce from here? It's below the 50-day moving average, which is not a positive. It needs to get back above that. It's a tiny bit oversold here. But if it's going to try to hold, it's right here in the wave 4. Look at that. It's right at the 61.8% fib level. So this is a place where GLD could hold if it wants to and try. And if it doesn't hold here, then you know what to say, Zach.
Katie, bar the door.
Katie, bar the door. Yep. Sorry to catch you off guard there, but yeah, if it doesn't hold 170, then it could go down to 165 easily. Then maybe 160 could go all the way down to 155. I mean, this whole wave 3 impulse could get retraced if we can't hold here at 170. So that literally is the line in the sand there for GLD.
Very well. Thanks, Rob. So next up, we are going to go over to CGNX for YJ.
CGNX. See what that chart looks like. Woo, not a good day today, huh? So Doji yesterday, indecision, and boom, was that an earnings report? Was that what happened today? Yeah. So dropping on earnings there, it looks like it's kind of in no man's land too. I would imagine it wants to come down and test this 45 level where there is a ton of support resistance. You can see it was resistance for so long. It was finally able to break above it, came down and tested it. Looked like we were going to move to the upside, maybe with the possibility of coming up to fill this gap here. And whatever happened on the earnings report, I'm not familiar with what they said or what the guidance was, but clearly it wasn't positive. And now it looks like it needs to come down and hit 45 and then reset and try again. I'd be shocked if it breaks below 45 because there's just so much support there. That would be a really negative sign if it did, but it looks like it probably wants to drift down here, touch that, and then we'll see from there. But yeah, pretty ugly day there.
Yeah, no doubt about that. A couple more symbols here for you are Meta and Google.
Okay, it did retrace its previous 4, so it had kind of got that out of the way. There's a couple that are interesting. We actually have a new alert on Google for our alert subscribers, but Meta's coming back down. We talked about this with this big move to the upside, that it was overbought and likely would come back a little bit. Is it going to retrace the entire gap? It's possible because you can see that massive support line here is at 160, where it bounced off of last summer. And so drifting back down, I'd hate to see it break 160 and come down and fill that gap. But you can see with the 50-day moving average is right there where the wave 4 is. But this big overbought condition, and yeah, it just seems like with this follow through below the 10-day moving average, that Meta kind of wants to come down and test that level of support there at 160 as well. We do have this position, as I said, for our alert subscribers on Google, and that's the you can see this. I'll take all this other stuff off and you'll be able to see this zigzag pattern, but we're hanging on by a thread here, as you can see, with this potential move back to the upside here. But it has been consolidating and has been holding, but notice it got hurt, when it had that failure with its AI stuff. And so that took a big chunk out, and it's been basing and holding itself in there pretty well. So with the fib level, needs to get back above that 50-day moving average. We're going to keep an eye on this to see if it warrants continuing to hold it. For now, no harm, no foul. We're basically exactly where we were when we got in. So just seeing if it can hold this fib level here on this B wave correction and turn and head back to the upside. Notice that the 100% extension is exactly where that wave 5 is. But if we start to get the market moving to the downside, can Google hold in there? Maybe, because it's been hit so hard already. But that would certainly play in. If we don't hold here, then we'll likely just go ahead and close that one off and wait for a better entry. But for now, it's hanging in there pretty well.
Very well. You got time for a few more?
Yeah, let's do 2 more and then we'll let everybody go.
2 more. All right. So we'll do BBBY. Always a good one to look at.
Yeah, because boy, I was talking about this. I think it was last weekend or the weekend before on a Saturday. We have one in we have a pretty nice shopping mall not too far from here, decent area. I was the only one in the store, the only one. Wow, it's just amazing. They're probably not going to make it. And then they were all just kind of like, yeah, you could hear the sadness in the staff's voice and everything. And they're all standing there looking at each other. Pretty good chance that, this was some, short covering, crazy bounce stuff, but there's just not really a viable business model there. And I think this is just a matter of time before Bed Bath & Beyond officially goes under. Can they bounce off of here? Anything a last minute financial bailout? Who knows what could happen, but it just doesn't look good. And this is one for me that I'd stay away from. If you wanted to take a really ultra speculative play here, it is getting close to the pink sheets now, but if it can mount some sort of a bounce on some headline of some kind, maybe you get some sort of a lucky short-term bounce, fortunate, should say, short-term bounce, but that's it. That's really all you have here. Yeah, it's just the future is not good for Bed Bath & Beyond. One more.
Oh, it sure doesn't look that way. All right.
Not at all.
One more for tonight. We'll finish with Oxy for Ren.
All right. That's pretty good. We didn't actually look at oil, so Oxy would be a good proxy for that. And the USO just can't figure out what it wants to do with 70. It keeps running up, goes above it, comes back below it, but it's just going back and forth around 70. Now, some of the other oil companies have done well because the price of oil has stayed a little bit elevated, even though it hasn't taken back off to the upside. And perhaps the consumer debt numbers that I showed you earlier, well, maybe we're not going to drive as much if oil prices stay high. But in Oxy here, you can see this drop. It's oversold right now. We have a bit of potential support right through this area. Separation from the 10-day moving average. So with the gap and a bit of support here, perhaps this one can mount some sort of a bounce back to the upside, but it really needs to hold 60. If it doesn't hold 60, then it's very highly likely coming down to test those lows at 56. There's not much to hold it, but right now it's oversold. It's got a gap. So perhaps at the beginning of the week, we get some sort of an oversold bounce out of it. And then the key will be, can it recover the 10-day moving average? Can it recover the 50-day moving average? What happens with the price of oil? You know, if the consumer starts looking weak again, which, you know, we just had the January sales, we're still spending, but by the numbers, we're going into debt to do it. How long can that last? We'll wait and see. Thank you so much for spending some of your Friday evening with us. We enjoy doing these and hearing from you. Appreciate it. Have a great rest of your evening and enjoy your holiday weekend. We'll look forward